Good morning, everybody. It is Thursday, October 6th, 2022, and the world is changing all over the place. Some things remain the same, however. I'm going to start with a little change at my investment firm. I had my every third year audit from the state of Wisconsin yesterday. Went pretty well. Had all my files out for them, and we went through everything. So out of all the files I have, they just happened to find two that had a mistake. So I'll be getting those updated. Other than that, the biggest change is that they want to see my investment letter folded in under my investment firm. And so we are going to have to figure out what exactly the rules are on that. I expected this to happen 3 years ago, and they're just now pushing on it a little harder. If you take a look at something like Fundstrat, he does a similar thing. So FS Insight with Tom Lee is a Fundstrat company, and Fundstrat is an investment firm, but they also offer this investment letter and research service. I think it's $2,500 a year that I pay for this. And, I get some of my information for you from here, but I also subscribe to Forest from the Trees, Trading with Cody, a whole bunch of other things that I take a look at. And there's probably, there's dozens more. And if you take a look at everything I'm looking at, so I just have all sorts of research links that I look at on an ongoing basis. I do primarily use, however, in the resources, these top financial websites. So I am repeatedly using these, and this is getting updated because there's a few more that I've added. So if you are a fundamental trends or margin of safety investor, you'll see a page like this. It gives you some of the things that I'm using, from paid to free, including a lot of resources that are global in nature or U.S. agencies. We always use BLS, Department of Commerce, Department of Labor, Energy Information Administration, International Monetary Fund, World Bank. But this list I'm going to expand. And if you have anything that you really like that's generally free in nature, go ahead and send it to me, and I'll take a look at it and possibly add it. One of the things that members are going to notice is that under member content, it just goes to the most recent content. And you can tell what it is by what it is tagged as. So we have member content, rare investing, global trends ETF, retirement income options. So this is how you're going to find things. I got rid of the tabs because it was just too much navigating for people. And I really want you, especially if you're a rare member, I want you to be able to see everything right off the bat. And if you're not a rare member, I want you to be able to see how many things are in rare investing. Global Trends ETF is becoming the most popular service on the site. But I think that the investor ideals sustainable growth is probably going to take off real soon as well. I'm advertising that on Substack. So I wanted to go through that. The investment firm changing its nature a little bit. I haven't really done financial planning in a long time. I made it official. I'm doing portfolio consulting, investment management, and low-cost 401k plans. And something that I'm going to add to the portfolio consulting is a quick start program. So if you are interested in getting your portfolio jump started, I don't know if I'm going to call this jump start, but that's really what it is. So if you're looking to have your hand held for a year as you get up and running with me, I'll have a couple of different plans. I was calling them green and gold, but I think it's going to be jumpstart and consultant or coach or something like that. One that'll be, like $800, and the other one will be a little bit more comprehensive. So what did we learn today? Well, I'm just going to go back to the article from a couple weeks ago that the Fed is not your friend right now. We saw that jobless claims went up a little bit, but that was mainly from Hurricane Fiona. So the jobs market remains very strong. And we're going to get a boost as these people go back to work next month. So what happens? The Fed gets more hawkish. Then what happens? The dollar gets stronger. This is an article from Bloomberg that talks about how strong the dollar is and expected to be. Where have you been hearing that for a very long time? In the videos, I talk about the dollar a lot. I don't write a lot of articles about the dollar. I usually refer back to my thesis that is 10 years old now, that the dollar would just keep getting stronger as we got past the oil age. And a lot of people who are backwards looking believe that the 1970s reality would dictate the future. That's just not true. The future is dictated by the productive capacity of economies, and the United States is the most productive economy on the planet among large nations. Again, I always put in the disclaimer, there's some little nations that are more productive, but there are no large nations that are more productive, not even China. If China is more productive, then their per capita GDP would be higher, and it's not. In fact, it's not even close. So the dollar post-petrodollar, post-OPEC deal, which clearly we learned that we're past, is going to keep getting stronger. And why is that? It's just because we have a better, more trustworthy economy, better systems in place, better balance sheet, better economic prospects long-term, strong military, global diplomacy, banking system that reaches everywhere. There is nothing on a comparative basis with any other economy in the world that would give them an edge over the United States. And as the United States builds an Atlantic bloc that'll include our neighbors, Canada and Mexico, and will eventually push more into Central America and South America. Notice the deal with Venezuela that I told you early this year was going to happen. And in the same calendar year, it happened. And they're saying 2 million barrels of oil per day from Venezuela by 2024 or 25. And they're going to increase production by about 500,000 or 600,000 barrels pretty quickly in the next several months. So by next summer's drive season. And that heavy crude oil will get into our refineries and help us next summer. Winter's going to be rough, though, especially on natural gas. I've already set my thermostat lower for the rest of winter. I say the rest of winter because we've had a couple frosts in Wisconsin in September. So I'm just going to wear my hoodies. I've got a whole inventory of them for poker. So the reality is that natural gas is going to be very expensive this winter. That's good for one of our investments, two of our investments, actually. And if you can do a little bit by turning the thermostat down 2 degrees, you're probably doing everybody a favor. Because if everybody does that, it's a big deal. In any case, the dollar is just going to keep getting stronger. I've showed you the chart over and over again. And it's because we are moving past the day and age where OPEC can manipulate the system much longer. They've got a couple more years in them. But as the cars come online that are EV, as solar and wind develop, as supply chains move, as new drilling occurs, OPEC's going to basically lose most of their power by 2027-ish. And that's something I've been saying since 2020. Back in 2012, when I said that the United States would be energy independent by 2019, people laughed about that. Well, we were. For a hot minute, we were. And then COVID hit. We had a whole bunch of oil companies go bankrupt for the third time in 6 years. The first 2 times, it was because OPEC attacked them, and then COVID blew them up. But now they're coming back. And there's one company in Texas that I'm very interested in, and I'm adding to the very short list this weekend. It's a company that started in 2015 by a couple of entrepreneurs who saw that all these bankruptcies that were happening the first time that OPEC attacked American oil represented a longer-term opportunity. And they were able to buy dozens of oil companies and hundreds of pieces of property at bankruptcy prices. They've recently completed a merger with another company where we liked the CEO at the time, and they are now a huge Permian producer, a lot of Permian resources with this company. And I believe that between the income that they're throwing off, which is targeted to be 50% of free cash flow, the incredibly low leverage, they have a balance sheet that's below a 1 ratio on leverage, so they're really not a levered company, and the fact that their assets are great and came to them cheap means that this company, now that it's merged and saving about $400 million over the rest of the decade from the synergies between the companies, is probably going to kick off a dividend above 5%. It's a variable dividend. It has a base and then a variable rate. And ultimately, the company probably gets acquired 4, 5, 6, 7 years out by a Chevron or an Exxon, where it merges into whatever Occidental is at the time, or maybe Pioneer Resources. We'll see. So I'll be adding that this weekend. Take a look at that company. It's a Permian Resources best idea, I would say. But I'm not going to tell you the name of the company. Going back to the dollar, by the way, Shooter, if you're not subscribing to him for $1.99 a month, you're missing it, because his little videos that are just a couple minutes are gold. So if you go to the Investing 2020s, you'll see that Shooter has just his little videos here that help people out a lot. go to the playlist. You'll see that there's quite a few. I mean, these little snippets that he does and shows you a chart and explains what he thinks it means. Like I said, for $1.99 a month, send that guy the money. I will probably bump this up to $9.99 a month at some point. Eventually, we're already working on a mini camp for him too. So we're going to have a number of videos to help you learn about trading if that's something that you want to do. But even if you don't trade on the short term, understanding how traders work and how they say things and the narratives they create to justify their trades is probably something that is worth knowing. And I think Shooter's insights there are pretty valuable just for the background information. So again, I would go ahead and do that. You can sign up right up here. If you're not a subscriber, there will be a little thing that says, jump in. All right. So what do we know about oil right now? Go from the dollar to oil and a whole bunch of shameless promotions. Right? Disappointed in the Saudi rebuff. Saudi Arabia reducing oil production by 2 million barrels a day in conjunction with Russia. So between Saudi Arabia and Russia, they're like 1.3 million of the 2 million. It is clearly price manipulation. They know that their time is limited. That's why they're doing this. They wouldn't do this if they thought that the price of oil was going to support them for 30 more years. They know that the end of the oil age is upon them. They've been targeting 2030 for when they're going to be getting a lot less revenue from oil and gas. I think they're spot on. So if you take a look at OPEC charts and the OPEC reports, go to their website, you see them talking about rising oil demand through 2045 or 2050. But then you see the key player, Saudi Arabia, planning for oil demand to go down after 2030. Think it through. Remember that saying that you heard from a parent or grandparent or aunt or uncle? Don't listen to what they say, watch what they do. I think that's very instructive. So when the trader narratives are out there saying, oh, Warren Buffett is buying Occidental because of the oil, because oil is going to be high price for a very long time, we're going to use something a little stronger. No, we'll stick with the farmer's words. I don't want to offend anybody. It's bullshit. Price of oil is not going to be high for a long time. Longer than a year or two, but not 20 or 25 years, for the next 2 or 3 years. And the price pressure is actually going to come down probably by next September, right after the driving season, because there will have been added capacity and we'll be past the peak 12-week usage, right, which is our summer drive season. By the year after that, there'll be 4 to 6 million more EVs on the road. Canada will be producing more oil. Our oil companies, particularly the ones in the Permian Basin, will be producing more oil. There'll be more oil from Guyana through Hess and Exxon. Venezuela, by 2024, 2025, let's say 25, be back up to 2 million barrels per day, presuming Maduro decides that it's in his interest. Based on the contract they gave to Chevron, I think he's moving in that direction rapidly. They gave 100% control to Chevron, as long as they pay a little bit of money to the state oil company in Venezuela. And the quid pro quo is that they're going to have fair elections. I'm sure Maduro sees that he doesn't have a lot of choices. It's either support the revolution, it's really kind of already under the surface there, or he decides to play fair. And if he loses, he loses. Bolsonaro, we're in Brazil, a little bit different game. And we're not at a point right now where we can push back on him too hard. But as EVs come on, solar power comes on, and countries all over the world address their energy issues through policy, these tough guys aren't going to be so tough anymore. I'll go out on a limb. I don't think either one of these guys makes it out of the decade alive. I think the Russians kill him. I think the Saudi Arabians kill him. That's what I think. And the reason I say that is because when those countries become poorer and poorer and poorer, because their oil and gas becomes less and less valuable, and the men and women of Russia are like, why are you dragging us through Ukraine? And the men and women of Saudi Arabia, probably coming at from different angles, decide they're unhappy with this guy. We'll see what happens. Or Joe Biden, being the tough guy that he is, he might just put the thumb down on this guy because you already know he doesn't like him. And if he can put the screws to MBS, Biden is going to do it. That might be his last act in office in a couple of years. Oh, hinting at some political stuff. Yeah, we'll finish on that. So since we're on piece of shit people, Xi over in China, we'll see if he wins or loses at the China's Party Congress. I'm not so sure he does. I mean, the odds are in his favor, but there's been a lot of rumors that if they do give him another term, it's not a pathway to a life as the president of China, and they're going to put some constraints on him because not many people in China really want to get into a war over Taiwan. This whole aggressive approach in China, I think, is starting to wear thin. Something like that's going to happen to all of these guys. It's probably all in this decade. Let's go back to the dollar. Would you want a yen or a yuan or a peso or a pound or a real, rubles? Would you want any of those instead of a dollar? Drop yourself hypothetically onto any spot on the planet. Would you rather have a dollar or one of those other currencies? And maybe if you're on some sort of a trip and you need to go to a restaurant, you might want one of those currencies. If you really want to preserve wealth, you really want something that's transportable, you want the dollar. It's not going to change in our lifetime, folks. It's not going to change. So energy probably got as cheap as it's going to get until it gets cheaper next time. And what's going to make it cheaper next time? It's going to be fast growing solar and wind, which is still concentrated in a couple dozen countries, which means it has a very long ramp up. You're going to see in our lifetimes probably 80% of energy coming from renewables, probably get to 50% sometime in the 2030s. That means that natural gas and oil have limited shelf lives. In countries that have natural gas and oil, if they can't export it, they'll use it when it becomes super cheap. And they'll just do a mathematical equation. Is it cheaper for us to get our natural gas and oil out of the ground and use it at home? Or is it cheaper and cleaner for us to use solar and wind? And as those lines cross, even as the price of oil and gas goes down, because we know that wind and solar keep getting cheaper too, solar in particular, there's just a point where the lines cross. Hey, yeah, we got a little bit of oil and gas in the ground yet. And the conventional reserves that are coming out without much cost, we'll keep using. But why would we dig more? It's cheaper to put up with solar and cleaner to boot. So all these trends just continue to move. The big inflection point is when? 2026 and 2027. That's when most of the world is really pushing EVs. Europe in particular. The United States is pushing real hard. By 2030, you're going to see over half of the cars being sold EVs. I think it'll be closer to 80. We'll see. But either way, you can see how oil demand is just getting nicked and nicked and nicked and nicked till the dam bursts. Only a few years away, folks. So you got to be very careful on how you invest in energy, right? Since I talked about EVs, remember something that we talked about during CES 2020? And I told you that there wouldn't be self-driving cars this decade, but that still remains the hype. Self-driving cars, self-driving cars. And what did I say? Somebody post what I said. Only the geofence vehicles are going to be self-driving. So if you have a regular route with regular high-speed communication via 5G on that route, those are the only places that you're going to have self-driving cars. And it's mainly going to be self-driving trucks. A truck that goes from the factory to the warehouse, from the warehouse to the distribution center. How do I know that? I'm watching Amazon do it in Kenosha, Wisconsin, between Milwaukee and Chicago. Trucks go from one spot onto the highway. They take it, I think it's just one exit, and then they go to the other spot. There's a lot of Amazon stuff between Milwaukee and Chicago. And the trucks drive between them without a driver. Now, they still have a person in the truck, but the truck drives itself because it's in a geofenced area. Certain buses might be able to do it, but I don't see there not being an attendant. And you're certainly not driving to a cabin in the woods while you're asleep, which is what everybody in Wisconsin wants to do, right? Get home from work at 4 o'clock on a Friday, get in your car, have it take you to your cabin in the woods 4 hours away so you can sleep on the way, and then you wake up and drink until you pass out again, right? That's the life cycle of going up north up here. Then you fish in the morning, eat breakfast, take a nap, and wake up and drink again. I don't know firsthand about any of that. I've just witnessed. But yeah, the self-driving car, it's nowhere close to being what people envision. There's not gonna be any Johnny cabs anytime soon. But the logistical stuff, that's getting interesting. When companies like FedEx, or maybe even the post office and Amazon, and companies that go from factory to warehouse to distribution to retail, those are interesting ways for those companies and industry to save a lot of money, isn't it? Save a lot of transportation costs and logistical costs. So those are places that we can look for expanding margins, especially among the companies that already are using technology to increase productivity and lower their costs. That's what you want to look for. Companies that use technology well. How does fourth industrial revolution technology help companies expand margins during this whole supply chain movement back to North America. Now, self-driving cars brings me, in my mind, to Elon Musk. He's messing around with Twitter again. We made a couple good trades in it. Who knows what's going to happen? But I actually think he's going to be successful at Twitter. I think he's going to change the name, and he's going to add a bunch of the things they stripped out, like Vine. And he's going to compete with the Chinese companies, TikTok and WeChat. I think he's going to win. He needs to shut up once in a while, but I think he's going to win. So we can watch that. In the meantime, maybe he can work on this self-driving thing too. All right. There's a lot of rhetoric out there, so avoid the rhetoric, just like you avoid trader narratives from people talking their book, right? So on politics, something I want you to think about. Certain states are turning purple. So the movement in this country is definitely a step to the left at this point, even though we're in a year where the Republicans are supposed to make big gains. Here's why they're not. There are way too many people who are more concerned with the extremism on the right than the extremism on the left. Because the extremism on the left really isn't all that extreme, right? You can call them communists all you want, but we know that's not really true. Call them socialists all you want. Yeah, it's true for a few of them. For the most part, we just want a safety net. I talked about one in Milwaukee a while back, right? Milwaukee has largely gotten rid of its homeless problem because we opened up shelters and halfway houses. Just said, yeah, move in and we'll figure out the rest later. Drug addiction, whatever. Can't even work on those things if people are on the street, right? That's a liberal idea. It's not what people say, it's what they do. The extremism on the right, to a lot of people, appears to be worse than the extremism on the left. So here's what I'm going to tell you about this election. If the Republicans take the Senate, it's going to be by like 1 or 2 seats. But I think there's an equally good chance, after looking at the polls, looking at some of these races, there's an equally good chance that the Senate bumps up to 52 seats Democrat. It could go to 52 Republican, but I think it's more likely to go 52 Democrat. Here's the more interesting race is, do the Democrats keep control of the House of Representatives? And it looked like they were going to be about 10 seats in the minority after this election. At this point, I'd say it's a toss-up now. Everything is moving in the direction of the Democrats as we go into the election. One thing that could hurt it would be if the stock market drops significantly this month, which it very well could, and this guy, Sir Turtle McTurtley, is going to remind you that the stock market's going down. Here's what I want to remind you. If the stock market falls, what are you supposed to buy? Things related to the fourth industrial revolution, because that is supporting margin expansion in the economy. And clean energy, because it's such a huge market that it's going to take over. It's not going to be fast, but it's going to be faster than almost anything else has ever happened before. And things related to energy storage and transmission, not just creation, but storage and transmission, are going to be monumentally profitable, because what they're competing with historically gets more expensive. What they're replacing it with is something that historically gets less expensive. So as the prices on energy storage and transmission come down after the initial build-out period, the CapEx period, those margins will expand too. Over the course of this year, I believe that the Fed is going to keep sticking it to us, that we're going to get the final phase of this bear market in the next 3 months, a little bit less than 3 months, I think. I think the January effect coming up, if we get the correction that I'm talking about, the last leg down, is going to be massive. You might see a January that's up 30%. So you need to be a scale-in buyer and look for spots and devote a little bit more time to working on your portfolio in this fourth quarter, if I'm right. If I'm wrong, then it's just a different quarter in the future. But be prepared over the next 10 weeks, 11 weeks, 10, 11 weeks, be a buyer and a put seller. Because boy, oh boy, I tell you what, tech is going to do some interesting things. I put a link in the chat room. Told you to look for an interview with Kim Forrest from Boca Capital Partners. I'm not positive that I spelled that right. Yeah, I did. And it's on Bloomberg. You're going to want to watch what she says. So listen to what she says. All the things that I talked to you about, she basically summed it up in 2 minutes. This is where margins come from. This is who's doing it. This is what you invest in. So look for her on Bloomberg today. And again, if you're not subscribing to Bloomberg, boy, I tell you what, if you're handling your own money, I don't know how you don't subscribe to Bloomberg, to be real honest with you. I did update, and I have to update it at Fundamental Trends yet, but I did update the useful websites. I showed it to you on Fundamental Trends. There is a bundle right now, Wall Street Journal and MarketWatch and Barron's bundle. I think it's running at like $8 this week. Labor Day it was $6. Normally I think it's 10 or 12. But just look for that bundle and find your best deal. Now, if you already subscribe to any one of those publications, cancel everything. Wait 30 days for the system to clear out, and then subscribe to the bundle, because it's cheaper to get this bundle online than it is to buy any one of them individually. And if you really want, you can get paper Wall Street Journal and Barron's to your house for a couple bucks more. It doesn't cost much because of the advertising that they stick in there. I don't get any paper to my house anymore. Everything's online. Just sit there and read them with the paper and page turning, because do it online twice as fast. But all right, so short takeaway today: unemployment still not a big deal. Dollar staying strong. Energy going to be expensive for a little while longer and then come down hard. We have to transition along with it. Fourth industrial revolution, clean energy, carbon capture, all those things. This next quarter, you really, really need to be thinking about the long term in your portfolio. Oh, I guess one other thing. Kim Forrest on Bloomberg said something that I thought was interesting. The interviewer says, so give me one sector that you really don't like. She goes, well, there's a lot of things I don't like. Well, one in particular. She goes, well, REITs. Not a big fan of REITs. What I've been telling you about REITs, they're a lot more risky than people think. There's only 2 categories of REIT that have actually outperformed over the last 20 years. And they never outperform over a full cycle except these 2 categories, because a full cycle includes the up and the down. And REITs are incredibly economically sensitive. And she specified commercial REITs. So big trouble for those for a lot longer. A lot of those buildings have to be converted into something else. That's expensive. And the skim from the management and the REITs is easily 3 times more than what those people are worth. And in most cases, it's probably 10 times more than what they're worth. A lot of money getting skimmed out of those REITs. So they can say that they're giving you a 6, 7, 8% dividend in any given year. But when the shit hits the fan, the executives get paid and you get a share price that drops 30, 40, 50, 60, 70%. And then the dividend goes away because they have to retrench the company. Usually the new management comes in as the old one gets bonused on the way out. Better be very careful with your REIT portfolio. Those half dozen REITs that I'm on, I know those companies inside and out. American Tower, right? Vici. You gotta be really careful with these REITs, because just saying, well, they're paying, somebody pays rent. Well, what if they don't pay rent anymore? What if they go somewhere else? Can't do that with a 5G tower. The casinos were the only entity in America, and the only industry in America, they had 100% rent payment during the COVID crash. Only industry in America, the casinos paid their rent. Think that through. All right, have a good day. I'm helping my daughter move this weekend and taking the kids to a water park hotel for a night to give her a chance to set up the new place. Sunday, I will be putting out probably 2 or 3 articles over the course of the day, because the Packers play at 8:30 in the morning. So I'll be up all day writing. Then on Monday, I'm putting out an article on a company that you're already invested in that you should be ramping up your purchases of. You'll get the article before the public, but only by a day or 2. And it's a company Berkshire followed us into. It's a $12 billion company with a lot of content that's probably going to end up doing a merger or be acquired. And they pay a 5% dividend to boot. And I would make sure that it's paramount on your mind that you have some of this stock. All right. Have a good rest of the day.